Thank you. 大家好，歡迎。I think that's as much Cantonese I'm going to speak today. Very, very happy to see all of you here again on our annual Media Luncheon. And, as usual, we're going to go through some presentation, and then later on we will serve lunch, and then we will have a Q&A, hopefully before that and also in between. Today, I wanted to, this is the second year. We just finished the second year of our 3-year strategic plan. And as we began to review what we did last 2 years, we start to realize that we actually have largely completed the most of our strategic plan, 3-year strategic plan items, except just 1 or 2. And now sitting here, looking beyond for next year, and we're trying to build what are the plans that we're going to build over the next year or 2, and how we're going to be looking beyond, for the next 3-year strategic plan. Well, we're not going to start the next 3-year plan this year, but we will continue, and then we will really make sure that starting from the second half, we're going to look beyond into the future. And as we are looking around and looking back at what we did and looking ahead at what we need to be doing, we start to realize that the landscape has really shifted significantly, and we wanted to really, go through. So today is the opportunity we want to walk you through together with us the journey that we have come along, and start to really see whether or not the business we were in, the history that we have built is still the same, or we need to begin to adjust to the new changing landscape. So that's really what we are going to be talking about today. And let me just quickly recap. Hong Kong has always been the gateway, has always been the connector between China's growth and the global interest in accessing into China. And that is really Hong Kong's model, and that's where we have come from. And if we go back to the last 20 years, I promise that we're not going to spend a lot of time on the last 20 years, but we do want to look at where we started and where we're going to be going through today, because that tells volume as to what we need to be thinking going forward. So if we look at the Hong Kong journey over the last 20 years for the financial market and capital market, is really the IPO era, and then domestic growth era, and then the opening up era, and now we're getting into the mutual market era. And each one of them have very distinctive characteristics that we need to remember and have great implications as to what we're going to be doing going forward. Now look at our first era first. As we all know, the capital market of Hong Kong before 93 is a very different market. It's a regional market with international participation, largely listing companies from Hong Kong and around Hong Kong with some mainland connectivity. But that all started to change in 93, because this is the time where China needs capital badly, and Hong Kong is, from that point on, become the capital formation center, offshore capital formation center for China. And we started with Qingdao, Shanghai Petrochemical back in 93. Then another very big wave coming in the late 90s, in the early 2000s, big banks, big insurance companies, big industrial companies, big energy companies. Essentially, all this made the China Inc., the most important companies in China, started from the late 90s to 2000, have become permanent features of Hong Kong Inc. We also see a very large different wave over the last 10 years is really the private sector. The private-owned enterprises like Tencent, like BYD and Mengniu, they become, again, a very different part, but distinctively also Chinese characteristic of our market. We are also starting to look for international companies to list here. I think some of our reporters here is more handsome than this guy, but this, I understand, starting from yesterday, is now the ambassador for Samsung. And so the international companies really begin to show up. and we wanted to continue that trend. And today, we are already, we have about 1,700 companies listed in Hong Kong, and about 60% of them are China companies. And the size of the market has also gone through a transformative growth. Back in 1993, overall market capitalization of Hong Kong is about $3 trillion Hong Kong dollars, and today it is almost 10 times as big. It's $25 trillion in 2014. And that is really heralds the massive growth of our capital market and the whole industry together with it. In terms of trading, back in 93, we were trading about $5 billion, dollar worth of shares, and today we're trading, close to 70 billion last year. For the first full month of this year, we are close to 100 billion Hong Kong dollar for a whole month. I think, over the last 5-6 years, we have a few days where we have, maybe just about close to 100 billion trading. But now, this year, first month alone, we already have, on average, close to about $100 billion. And in that process, we really have created a massive ecosystem in Hong Kong that is anchored in Hong Kong, but with a tremendous amount of influence coming from the mainland. We have a whole industry of investors, investment bankers, broker dealers, professional service providers, analysts, and the entire industry was built onto this. And we indeed have become from a regional financial center to a truly international financial center over our IPO era. But we look at why we succeeded in that our first stage. Why in the IPO era we succeeded? Because we connected China with the rest of the world. But why China wants to connect through us? China wants to connect through us because they trust us. Because we are in the same time zone. Because we are culturally similar to China. And because we are the first mover. Most importantly, we're the first mover. We identified the opportunity, we went in there, we locked in our future. And that's why China connected with us. But why does the world connect with us? Because of a rule of law? We are English common law tradition? Because we have international standards? It's a capitalist market. It's an open society. We have strong corporate governance. And we have a reliable and resilient and robust market infrastructure that are very similar to international. So we have what works for us from China, and we have what works for us for the rest of the world, and that's why we succeeded. And this is really the most important lesson we learned for our past, and trying to see whether we can carry that on into the future. Now, that essentially is the last 20 years. We become the offshore capital formation center of China, where money flow from the global, investment community all the way into Hong Kong, through Hong Kong into China. In exchange, equity were raised in Hong Kong, and Hong Kong become the secondary trading center of those China equities in Hong Kong, and that guaranteed our prosperity for 20 years. Where are we from now? Where are we now in the last 5-6 years? We are now moving into a domestic growth area because the money that has been raised in Hong Kong, the great opening that has been achieved primarily through Hong Kong, have really been used to fund and fuel the growth domestically in China. And this is the area, this is really the last 10-some years, between 2010 and 2001 and 2010, this is really a massive domestic growth. China truly began to take off in this area. This is Pudong, literally just 20-some years ago. It is Pudong today, literally today, because the building, the tallest building there, has just been literally completed in the last few weeks. But this growth is both physical growth, economic growth, China is fundamentally connected with the rest of the world in its economic fundamentals. And it is now time China is globally connected economically. And what is more relevant for Hong Kong is that growth is now staying at the fundamental economic level. It is now rapidly moving into financial services, massively, quickly moved into capital market and financial market development. And this is really something that we absolutely, Hong Kong, have to take notice, because we're no longer going to be just providing capital for China. China is changing so fast and so much. And the domestic capital market is becoming a huge, for many, many years, beginning to be considered to be a competitive challenge for Hong Kong. Just look at their size and look at their speed. Shanghai, Shenzhen, they are now, they literally started, but when we started the A-share listing, the domestic capital market was just beginning, was a little baby at that time. But today, after 20 years of growth, it has 2,600 companies listed between Shanghai and Shenzhen. And 10 years ago, 2005, their market cap is $3.2 trillion. Remember the earlier chart we showed, Hong Kong back in 93 was about 3 trillion Hong Kong dollars. This is renminbi, obviously, with the exchange rate. So 10 years ago, they were just about the size that we were 20 years ago. Today, the market cap of that market is $37 trillion. And that's today. So that's already significantly larger than Hong Kong. But only 10 years ago, they were just as large as we were 20 years ago. In terms of trading, that market trades so much better, so much active, and so much bigger than almost anything that we've seen around our region. The overall turnover, average daily turnover, is 300 billion in the Shanghai market. And for us, last year, what she said is close to 70 billion. But in the last few months, a few weeks, when the trading happens, with this big bull rally in Shanghai, that number is over $1 trillion. Obviously, our number is now close to, 100 billion. But this is like a 6-7 times of ours. But very often in the last few weeks, there were 10 times. So even though when we are 100 billion, they can go up to $1 trillion. So that market is becoming so big, so liquid, and so deep that we have to think deeply what we need to be doing. That's the securities market. This is the cash equity market. Now look at the financial futures. Look at what they're going to be doing in terms of equity derivatives. The equity derivative, our derivative market, which is largely equity, it took us many, many years to gradually come to about the level at 2014, and it's about 600,000, 500,000 contract on average, every day. But if you look at Shanghai CFAX, Shanghai Financial Futures Exchange, they literally started only 5 years ago. They were testing, they were simulating only 5 years ago. And now today, they already become CSI 300, is already the world's single largest derivative contract traded on any exchange in the world today. And they have only one contract. Two, but CSI 300 is the bulk of it. But we have 150 contracts, and in aggregate, this is how much trading that we have. So their speed is massive. Moreover, China today does not only need cash to fund its economy, it needs massive amount of commodities. Almost any commodity, you name it. China is either the biggest consumer or the biggest producer or both. And that makes China the biggest risk manager, potentially, globally, when it comes to bulk commodities, because of that particular import. And that that need have not been sufficiently met. Therefore, China started to develop significant amount of, spend a lot of efforts and money to push for domestic commodity market. That's why we have Dalian commodity market, Zhengzhou commodity market, and Shanghai's future exchange, all in copper or iron ore or thermal coal, agricultural products, you name it. And they become such a significant part of the overall ecosystem of China's financial establishment. What are we going to be doing there? Do we have anything relevant, any value relevant we can add there? Because we were the capital formation for equity. But all the rest of it now is becoming so much larger than our traditional IPO business that we need to ask ourselves, where do we need to be? Where can we add value? Where Hong Kong's future is going to lie? In terms of commodity futures, they only started a few years ago, only about 10 years ago. Today, the 3 commodity exchanges in China together, their trading volume, 2014, is already larger than anybody else in the world. You could argue that they have a lot of retailers, they have a lot of retailer trading, whatever you do, but at least from a trading perspective, from an exchange-traded product perspective, they're already a global leader. CME is here, massive global leader, and ICE, with ICE plus NYSE and everything else. Hong Kong Exchange, obviously, we are down there. We're not anywhere on commodities. Obviously, we bought London Metal Exchange. London Metal Exchange is the dark blue, but the dark blue, we trade 25 tons per contract. But Shanghai trades 5 tons per contract. So if we adjusted the 5 ton, we are like CME and the global leaders like ICE and CME. But comparing with together all the China exchanges, we are still behind. But most importantly, in the Asian time zone, in Hong Kong, we are just beginning to build a commodity franchise on the back of London Metal Exchange. So today we talked about China fundamentally grow in its own fundamental economy, financial market also massively growing. But what is even more challenging and more interesting to Hong Kong is that not they're only growing, now they're opening up. They're trying to open themselves up. They're trying to basically come to the world and invite the world to China. So we're entering into the third era of our important growth, which is the opening up era of China. And that's really literally happened in the last 5 years. I mean, they started many programs a long time ago, Q fee, RQ fee, a little bit renminbi settlement, but the real kickoff is really started about 5 years ago. And there, they wanted to come out, they want people to come in, but exactly what they wanted to do, exactly what they're trying to do, what are the tangible progresses that they've been making? Let's take a look at it. Opening up, but how? How is China going to open up? Obviously, they want international investors to come in. They wanted their domestic investors to go out. They want their renminbi to be internationalized. This is all very, very big, lofty goals, and they're trying so hard on it. Investors coming in because they want their investor to invest in the product in China so that they can have international participation and funding for those products. But more importantly, they want the international money to work with domestic liquidity, and then that mix is going to create a chemical change in China that will help them internationalize and help them improve the domestic capital market. Because their domestic market is very large, very deep, but very challenging, with a lot of problems. And they want the international money to be there to cause a positive physical and chemical change for the better. They want their domestic investors to go out, because there's just too much money sitting in China's banks that need to be deployed globally. But they cannot send everything through the state-owned enterprises. They want investors. They want Chinese domestic investors to take the money and make their own investment decisions to diversify away from China to globally deployed because there's too much money, as we talked about it before, 22 trillion US dollars sitting in the banks. And that need to become a 10, 15 trillion dollar, and then the rest of it need to come to the capital market. But where are they going to go? They're going to be in the domestic market, but more and more, they need to come out. So we need to find a way to see whether we can have them through Hong Kong, whether we can have the international guys going in through Hong Kong, whether we can have domestic guys to go out of China through Hong Kong. The renminbi need to be internationalized. All this in and out, if there can be in renminbi, that renminbi will become one day a truly convertible currency. So internationalization of capital market and the currency will present the biggest opportunity. And if we're not careful, and if we're not doing everything right, it will become our biggest challenge and a challenge to our future. The big question facing Hong Kong, we have many. Do we want to help the mainland with these emerging new needs? This sounds a pretty easy question to say, of course, yes. Not necessarily. Many of us have doubts in our mind. Many of us have reservations in our mind. The relationship between the mainland and Hong Kong is a complex one. Is a one that sometimes causes emotions. And this question, for financial professionals, is pretty easy. But for our broader population, for our political leaders, are not necessarily that straightforward. Because we obviously have a great prosperity going for a long time. We would like to protect it. We would like to entrench it. China's backward, many ways, worked for Hong Kong because we are able to help and be able to provide it. But their rapid growth is creating, do we want to help that? I believe the answer should be yes. But how do we make sure that those help are handled and this question is answered with our eyes open, our minds open? What is the risk and reward for Hong Kong to facilitate the mainland in these new areas? Do we want to help them on commodities? Do we want to help them on equity derivatives? Do we want to help them to move money in and move people out? I think if they're not going to change, we're fine. But if they are going to change, can we actually stop it? We can't stop it. You have to go with it. You shouldn't stop it. You won't be able to stop it. It is something you have to embrace. But you have to embrace understanding exactly why you want it and what are the reasons that you have to watch out for. People say, is our market is going to be too much like China? What's wrong with that? Then you ask yourself, well, we don't like many of the things that is in the Chinese market. But then why we are not confident that by integrating, we will change them rather than we will be changed? Why would we not have the confidence? Back in 93, when we did the IPOs, everybody say, oh my God, all these Chinese companies, those SOEs, they don't even know governance. They never even have shareholders before. How could that happen? You know, our shareholder, we took the chance, we worked through it, we built a great system. Our standards, our influence ultimately prevailed. And those companies become internationally competitive, internationally governed companies. Why do not we have the confidence that we can do the same with secondary market? Why do not we consider that whatever risks that may come out of this new change, this new direction of fund, is also going to bring opportunity that is so big and so large that we absolutely have to overcome the risks and the issues and challenges that may come our way. Then what's the risk and reward for not facilitating the mainland change? We can sit around, we can say, oh, they never succeed. Oh, it's going to take them forever. Oh, we're always going to be better. We're not doing anything. What is going to happen? We have to answer that question. Everybody is trying to go into China now. Everybody wants to repeat and replicate a Shanghai-Hong Kong Connect. And China itself wanted to do it differently as well. Because it doesn't want to put all the eggs in one place. The free trade zone in Shanghai, in Shanghai, in Qingdao, in Dalian, in anywhere else that is all going to be mushrooming over the next few years, they all going to want it to do something because China knows that it cannot change its domestic system sufficiently fast enough. So China wanted to create new order, new areas where new rules govern. It is in those new rules that they were becoming a lot more competitive. And those new areas will become a solution for them unless there's a better solution or there's a solution earlier. We have a window. When all these free trade zones become fully free trade zones, then they're all going to be like Hong Kong or similar to Hong Kong. So the issue is, if it's going to take them 5 years to be as good as Hong Kong, why shouldn't we be in there now and make sure that we are China's biggest free trade zone already completely internationalized? Why not internationalize your currency, internationalize your market, internationalize your product, internationalize your investor base through Hong Kong? Not facilitating it is not a real option. And it's an option some of us may feel that is the easy option, but it ultimately is an option that is going to end Hong Kong's dreams and aspirations. Can we afford to stay with the status quo? We already answered that question. I already answered the question. People may have a very different view. So if we believe we should get involved, if we all collectively decided this is something, this growth, this change, this shifting in landscape require us to do something different, if that's the case, are we sure that we have the value to add? That's really the key. Because this relationship has to be a mutually beneficial one. We are not there because they give us some beneficial treatment. We are there because we're delivering value to them. That's why we are gaining value and we're delivering value. So are we really ready? I hope we are. And the exchange is trying to be ready. And we like to say, yes, we are ready, or we need to get ready very, very soon. So the last few years, we're really trying to put down all the building blocks to get ourselves ready. So we started really rebuilding much of the relationships with a variety of partners, regulatory agencies, government leaders, think tanks. We aligned our trading hours. This is only one small example of significant changes we have undertaken to improve our market. Trading hours, risk management, data center, and a number of other things that at the time looks controversial, but are essential, necessary steps to take in order for us to get ready. We make sure that our entire ecosystem is renminbi ready. Through dual class and dual counters and through TSFs and a number of other currency futures and everything else to make sure that when renminbi does come here, it will not just be only for settlement for trade. It will become ultimately investment currency. OTC clear. You read today what China is want to do with OTC clear. This is a huge opportunity and is yet unclear, and we need to make sure we're ready. We built partnership. We piloted a partnership. We built a joint venture with Shanghai, Shenzhen, and started the China Exchange Services Corporation. Then we bought London Metal Exchange to make sure that we are able to, at least in one clear asset class in base metals, we are a global leader. And we built LME Clear so that not only we are make sure LME itself becoming completely consolidated, but more importantly, LME Clear allow us to potentially build LME into China and China into London. Ultimately, we want to really begin the actual work of market mutual access with China, started with Shanghai. So Shanghai Hong Kong Connect started about some years ago and is really becoming the singular, final efforts for us to break down much of the barrier that are, stood between Hong Kong and China. So on November 17th last year, we formally launched Shanghai Hong Kong Connect. The two-way train finally left the station in Shanghai and Hong Kong and reached the destination safe and sound. So why we think, we need to really think, Shanghai Hong Kong Connect, many of you already know quite a bit of it. I still want to spend some time. We really need to understand what Shanghai Hong Kong Connect is and what its implications are into the future. Shanghai Hong Kong Connect is really a 5-party collaboration, or 6-party, depending on how many you count in Hong Kong. You have the 2 regulators. You have China and Shanghai Exchange, China Clear, and we usually say 6 parties because Hong Kong Exchange is actually 2 parties. We are both the exchange and we are the clearinghouse. So the 5 of us work together, and work together is the key term, is the key definition of success. Because by working together, we are able to make Shanghai Hong Kong Connect works. So Shanghai Hong Kong Connect was both the high point of the last era, of the opening up era, but more importantly is the beginning of the next stage, is the mutual market era for Hong Kong and Hong Kong Exchange. I want to go back to this chart one more time. I know many of you have seen this once. It's important for us to see the Stock Connect model, because this model is so important, and this model is something that's almost like a bridge that you can pre-manufacture it, and you can put onto different part of the river. The key success factor for the Connect model is that there's a regulatory collaboration. You have CSRC up there, we have SFC here. It's a completely regulator-sponsored linkage, sponsored opening. It's almost like we opened a common market with the 2 policemen on each side of it, checking their own traffic. And we have a lot of trust in each other because we can't afford to check their traffic. They cannot afford to check our traffic because otherwise the market won't be able to open that quickly. We trust they will check, they trust we will check. Mutual trust result in real sound regulatory collaboration between the 2 regulators. The second key point about Shanghai Hong Kong Connect is that home market rules. The red stay red, the blue stay blue, and they trade with their rule, we trade with our rule, with some changes, but not a whole lot. So that allows this to be really workable. It's the only workable solution. Otherwise, we're going to have to wait for 10 years if we have to require China to change or require us to change. Third is that despite all this home market rule, all the orders are going to Shanghai, 1 matching engine. All the orders are coming down to Hong Kong, 1 matching engine, best price discovery. Lastly, number 4 is most important, is super clear model. Because the super clear model means that everybody buy and sell clear in Hong Kong, everybody buy and sell clear in China, and every day only 2 guys cross the border. Hong Kong clear and China clear. That's the only 2 investors that come into this market every day at the end of the day. Everybody else just trading, money stays in their home market. Finally, the whole thing is renminbi. Why I'm repeating this? It's because this model is almost like a computer chip. It's almost like one of the chips that you can move on into different phones. You can put into different specifications. And this is the key. All the 5 things are the key to guarantee this success. And we fix this, and this chip can be scalable and can be replicable, can be put onto different places and different market. That's why we are now entering into the mutual market era. In this era, as we talked about it, there's a trading link, 1 price discovery there, 1 price discovery here. There's a clearing link. Every day, only 1 person crossed the market. You have 2 policemen down here regulating this huge mall, this IFC mall. And the 2 exchanges are handling all the trading. The 2 clearinghouses are handling only 1 money transfer every day. Only 1 money transfer every day. If that works, equity already worked. So right now we have the first shelf, Shanghai shares. The second shelf, Hong Kong shares. Maybe the third shelf, sometime this year, Shenzhen shelf. Then we can have equity derivatives, index futures, options, derivative warrants, then we can have commodities. We can have fixed income. We can have currency. We can have international equity. All of this started with Shanghai-Hong Kong Connect. And all of this started with the one model. We start with Shanghai, and then we start with Shenzhen. And then if we do equity derivatives, maybe we start with HKEx. If it's commodities, we start with Dalian or Zhengzhou or Shanghai. If it's fixed income, we start with PBOC, with CFEX, with Shanghai Clear, with China Bond. If it's currency, again, CFEX, China Clear, Shanghai Clear. International equity. There's no reason to believe that one day we can have international equity to be listed in this common market, where domestic investors, as you can see, all the domestic investors are not really physically carrying their money out of China. They're sitting in China. They're calling their own brokers. They're going through their own exchanges. They're all regulated by the CSRC. They all just come down here. And we just put more things in here. All the international investors, they will put their product here. For example, Shanghai Future Exchange, maybe their copper contract. A lot of international people want to trade. Then they can put them here. International can trade through Hong Kong. Shanghai Future Exchange and Shanghai Free Trade Zone. They can put something in here. We can trade with them. So international people can trade through Hong Kong because we are international clearinghouse. We are compliant with EMIR, European regulator. We are compliant with US regulator. So global financial institutions can trade here because their regulator will not allow them to trade with a clearinghouse that is not compliant and approved by their own respective regulator. The Chinese clearinghouses will never become regulated by the US and Europe anytime soon, which means many of the international investors will not be able to directly go to China even if China opens the door. So if we are able to find a way for them to come to Hong Kong, but going through this, so the exchanges are working with the exchange, the clearinghouse are working with the clearinghouse, and we are only doing one-time trade settlement every day. Let all the trading happen in here, and then settle and clear with Hong Kong Clear first. All the Chinese trading and settle clear in China. So there are only 6 guys, 7 guys, 6 guys, 6 payments every day, up and down. But thousands of, hundreds of thousands, maybe millions of people are trading here and trading there. So that's really what we believe is the future that we can look at it. The reason we want to use this Hong Kong Stock Connect model is because that model is like a chip, and that chip can be put into this phone, and this phone, and this product, and every single product, it's working exactly the same. Later on, China will be free enough to let everybody go in directly. All people could go in directly out of China. That's okay. Because still, this one, for many people who do not want to go, do not want to carry the money and open an account in Switzerland or in London, but they want to trade something international. They can sit home and trade as long as what they wanted is here. So it's up to Hong Kong to figure out what we can put in here that they need. And what we can ask them to put the product coming down here that international investors wanted to trade. And most likely, after sufficient product here, then the money there just want to meet the money here, because different kind of money, when they meet, chemical reactions start to take place. So that's really the mutual market model that we look. Then how can we succeed? We succeeded in building Shanghai-Hong Kong Connect. Can we continue to succeed? How do we keep succeeding? Very simple. 2, we need to stay relevant to China. 2, we need to maintain our core value. How do we stay relevant to China? We need to keep the trust and confidence. Because inherently, they trust Hong Kong more than they trust anybody else. Because of our culture, because it's one country, and because all the great achievement Hong Kong people have secured over the last 20 years. How to stay relevant? We need to build a broad asset class capability. We cannot be only cash equities. They need more. We need to have more. We don't do it for them. We do it for ourselves and them. We need to develop innovative solutions. The Connect model is an innovative solution because that solution allowed them to open so fast and so big without worry about it. That's because of the trade settlement, all the things that we designed for the Connect program. We need to be first mover. Because if we started something, it's very hard for other people to follow. But if somebody already started, we go and imitate. We will never be competitive. Then what are our core values that even when we try to work with them, trying to be relevant to China, how can we make sure we are not consumed by China? That we maintain our core values. Rule of law, absolutely, without a question. International standards, strong corporate governance, reliable market. Remember this thing that we talked about back in the IPO era? That's what kept us successful, and this will continue to make us successful. We have huge future ahead of us. It is not easy, but it's something that we really should treasure. It is something that we need to try very hard to maintain. Because ultimately, we want to make sure that Hong Kong remains a truly leading international financial center. Hong Kong is a small place, have a huge role to play. Hong Kong is a little city, have a global implications. Hong Kong is a small market, but we have huge ambitions. We are punching way above our weight, and we need to be standing on the shoulder of the giant. We might be reliant on many things from mainland, but we shouldn't be dependent on it. There's a big difference. Reliance is a factual reliance because we need water, we need vegetable, we need food. We have to rely on the homeland, the home market. But we shouldn't consider ourselves to be dependent. We're not. We add value. We secure our right to further development and to a great future. So that is really what I wanted to talk about today. I want to speak Chinese just briefly for some of the media friends, just on the last couple of slides. 就是说我们为什么能够认为我们继续还能够保持我们的成功的优势，就是我们一定要两个方面非常重要，我们还要不断的确保我们对内地发展的保持重要，但同时我们呢要坚守我们的核心价值。那什么能够让我们继续保持对内地发展的重要性呢？我们一定要双方一定要维护强大的信任和信心。我们必须在香港建立一个多元化的资产组合，因为简单的股票已远远不够。我们必须要提供像沪港通这样的具有极度创新的解决方案，来解决今天中国在开放的过程中间还无法马上克服的挑战。我们同时一定要不断地维持我们的先行者的优势，但同时我们在做我们这个整个发展的过程中间，我们永远不能忘记我们的核心价值是什么？法治社会、国际标准、良好的企业管制和一个可靠的市场，这样才能够呢保证，尽管香港是一个小城市，我们有大作用；香港是一个小市场，我们有大的这个影响。我们是一个，尽管我们是居于湘江，但我们的具有全球的雄心，一定要把中国带到世界，把世界带到中国，这就是我们今天要做的一切，就是引领香港成为一个真正具有领导地位的国际金融中心。谢谢大家 ，Thank you very much. I think we're gonna go back to this. Yes.
Thank you, Charles, very much. I think we have a drink here if you'd like to take a break. I can do a little bit of housekeeping. We're going to be doing Q&A momentarily. We'll have questions in English, Cantonese, or Mandarin. Please do wait for the microphone to come around. And if you need simultaneous interpretation, there are SI headsets and things out in the lobby area. Excuse me. So, Charles, are we ready to?
Yeah, I'm ready.
You ready to go?
Oh, you want to eat first?
No. I think they want to hear you first. So maybe we can start on this table here. Maybe the gentleman in the gray, first table.
Charles 你好，
你好，
喂，南澳财经台梁千友，想问一下关于这个刚才你提到这个共同市场，有可以把这个债券或者是其他的产品也放在里边。你看在股票以后最快可以放到这个市场里边的是债券、商品或者是什么呢？有没有一个时间表？另外就是这个沪港通这个额度的问题，现在看的。到在北上的这个沪港通的额度这个使用比较快了一点，你看会不会很快就会用光？然后你们会在什么时候再检讨这个额度的一个象限会怎么改变？好，谢谢。
对我现在没有所有的工作都没有具体的时间表，但是如果说你一定要说先后的话呢，我想可能是沪港通已经先通了，肯定是深港通大家都知道了，这是刚才讲的这个现货股票这一块儿。那我想在其他的这几个类别里边，应该来说股指的这个衍生产品，股票的衍生产品应该来说时间上应该比别的会早一些。第二的话呢，就额度问题呢，额度问题现在根本不是个问题。因为额度呢，尽管现在离这个总额度差距还很大，同时呢，现在这个额度呢，大家都知道是个净额度的一个概念，就是每天的买卖。由于现在建仓已经建到了一定程度以后呢，每天买卖呢现在都很积极，所以说呢，每天呢实际上你看这个交易量，远远大于额度的这个，因为每天都有买卖的这个净量。但我觉得最终呢，肯定是有一段时间以后的话呢，额度会达到额度的时候，我们这是应该是随时非常容易调整的。这个绝对不可能是说让市场说在额度面前停下来，这种可能性应该是不存在的。You decide.
Yeah, I'm sorry. Maybe Betty. I'm sorry. Next to Enoch, and then we'll do Enoch next. So, lady next to Enoch, and then Enoch. You're free.
你好，是无线电视记者李佳丽。刚才就是你提到，可能那个股指跟那个股票的衍生产品可能会比其他快一些。想问一下，你现在有跟那个相关的部门在探讨相关的事情吗？还有就是那个政府也说那个深港通可能就是会在下半年推出，现在其实进行的怎么样呢？另外就是想问一下，因为你今年就是你的任期到10月了嘛，那想问一下你还没有那个续任的那个想法，或者有没有现在在找那个替任的人选呢？谢谢。
好，这个深港通呢，下半年这个日子呢，你说的这个日期呢，我觉得应该是一个比较现实的日期，好吧？这个第二的话呢，你刚才讲这个股指期货，这些所有刚才讲的这些东西，我们都在不断的探讨、不断的讨论，而且和各个方方面面都有很多的这不是说今年才开始的，实际上从很早就开始了。那么呢，我也知道每天大家都要有干货要报道，但是今天这件事上呢，我真的没什么干货。但是呢，一旦有了很清晰的这个目标的话，马上会告诉大家。但是反正有一点是，5年以前你觉得5年以后才能做成的事儿，到今天来看也就3年就能做成。3年以前你觉得3年能做的事儿，我今天的看来2年大概就能做成了。这个发展是非常非常的快的，香港的这个步伐一定要跟得上，跟不上错过了，跟上了我们又锁住未来的20年的繁荣。下一个 ，next，
Maybe Enoch.
任期啊
I'm sorry.
任期，给我任期也好，是有没有在选这个备选的这个继任者也好，这都是董事会的，所以哪天见到周总的时候，好好的问一下他。
有兴趣留下来。
啊？
有兴趣留下来。
我要说的话都跟他已经都说过了。
Maybe Enoch, and then we'll come to this.
Yes.
I'd like to ask more about this derivative because you said that it's likely to be the next market mutual assets. So will that be only some newly launched derivative, or will be traded the current product? What will be the likely option? That's the first question. Second question is about this assumption in Hong Kong Connect. We're also talking about how to reform the Shanghai and Hong Kong Market Connect to improve it. So do you think that the Shenzhen will use the enhanced model, or do you think Shenzhen will have something additional? Because right now mainlander already can trade through Shanghai to Hong Kong. So if the Hong Kong and Shenzhen Connect do not have any additional, we need to raise the question why mainlander trade through this new train. So can you tell us what's the plan?
Yeah, I think the Shanghai and the Shenzhen Connect, clearly the southbound, they will have to, work out between Shanghai and Shenzhen how the southbound works. But as far as Hong Kong is concerned, all the Chinese are able to come down to Hong Kong already. But I'm sure Shenzhen Connect will be the opportunity for us to consider whether, even in Shenzhen's, southbound, whether there will be additional changes that will, potentially be introduced. I'm almost certain that we will consider enlarging the underlying eligible stocks, to be included in the southbound of Shenzhen. But exactly how much we're going to enlarge it, and it remains to be details that we still are now trying to work out. I think the initial launch may or may not include additional different kind of securities like ETFs and bonds and other slightly different, But even if the initial launch of Shenzhen does not include any of that, it's completely envisioned that over not too long, that all of them will gradually, all cash equity or cash product will be included in the southbound. But there will be, certain carve out of the smaller cap, companies. In terms of the northbound, obviously the entire Shenzhen market is new. That is not currently available for international investors, and that will become very much available, after Shenzhen. And there are a number of other, potential enhancements that we'll continue to be exploring. And as we all know, we said this is the beginning of a long process, the beginning of building an ecosystem. It is very important to know that we are building an ecosystem of mutual market access. So, we are now adding Shenzhen, adding derivatives. So the adding and the improving are all going to be happening together in parallel. Yeah. Did you ask me another question? I think we're discussing, all of them, but you're going to start somewhere, and I think you either start with a big contract or you start with a small contract. You start with, but ultimately, I think we're going to look at both the possibility of a connect model with one of China's, derivative exchanges. But that will probably take quite a bit of time to build because the trading, derivative, and risk management models are very different. We need to build the system. Or we can do licensing arrangement. So we are all discussing, details. And we will let you know whenever there is an announcement to be made.
I think we said we come to the far side. Anybody here in the far table to the right, number 2? Okay, maybe Peter from Reuters.
Peter Fellows from Reuters Breaking Views. I just wanted to go back to your analogy about the chip you've designed. I wonder, I realize this is not necessarily in your gift or your decision, but how would you rank the possibility of the Shanghai Exchange or one of the other markets in China taking that chip design and putting, instead of Hong Kong, another exchange outside China into the chip set, whether it's, Singapore or London or you name it? How would you handicap that possibility?
I think everybody's talking. Everybody, because there's no intellectual property rights on that, so it's not a patent. Anybody can use it. It's all published. And I think everybody's talking. But, if you're Shanghai, do you want to open another market? or you want to make the open market a lot bigger, a lot more efficient, and a lot more impactful first. I would have chosen the second, but I'm sure they should be talking to everybody because they could have actually come up with different solutions. But I think for out of time zone connect, that model does not really work that well because, as you can see, this model requires people or both market are up and trading because that, your market has to open, that market has to open. And as you know, during the Connect program, the holiday schedule is such if there is a holiday on either side of the market, the Connect program stops on that day. Even on the day, like before Christmas Day, we're closed. But the day before Christmas, they're open, we're open, but Shanghai, Hong Kong Connect closes. Why? Because it's T+1. So if you trade on that day, but Christmas Day is the next day and the banks cannot settle and clear, you couldn't do it. So today there are quite a few days that it doesn't work. And I think after Shenzhen Connect is introduced, we will be looking at holiday schedules and how to continue to shrink the number of holidays in which the Connect closes because of the various constraints. And when the derivative market actually is introduced, this could become even more interesting as an issue. So they're welcome to start. Everybody wants to start. And handicapped, I don't really know. I think in the 30s.
Regulatory cooperation.
That's correct. But, I don't want to pass judgment that the CSRC won't trust anybody else. I'm sure they will. But I'm sure they trust the SFC a lot more than trust anybody else.
I think there's also on table 4, lady in black. I think the mic's right there.
Thank you. This is Carrie from Global RMB Euromoney. So there was this piece of news in the morning saying China bond, the depository and clearing house for the OTC bond market in China, have already filed application of a similar scheme with its Hong Kong counterparty of the OTC bond market Connect. So given it's an OTC market, a lot of people say it will be at more hurdles of using this Shanghai Stock Connect chip to be used. Do you agree with that? And do you know this initiatives? Thank you.
Well, we do know it. That's why it's here, right? And I think we are in various degree of depths of discussions with a variety of players, including Shanghai Clear that made the announcement today. The OTC market, the fixed income market, and currency market are very different. They are bank-dominated market. And they are also a market where the most important element of those markets, which is the rates, either exchange rate or interest rate, are still controlled. And that process, so the whole idea of fixed income and currency is trying to use the offshore market, whether exchange traded or OTC, as a way to help China develop a market-driven rate-setting mechanism. And if they're having difficulty building it onshore, we can start it over here, and that in turn will allow them to, gradually building it. I think but at the same time, this is a very big part of China's reform, and it's going to accelerate big time. And Shanghai Clear's move clearly is their way of getting into the free trade zone, and they basically are creating a market like this in free trade zone. If we are able to do something that can solve their problem, they can also consider working with us. So therefore, we really think we need to race against the clock on all of them. We started here, completing it here. We got to really keep on moving. And because the moment you move, you create a great model. Then they will say, oh, okay, let's give it a try for a year. And if it works great, spectacularly, they don't have to find another alternative solution. Yeah.
Maybe the far side. If anybody wants to raise any questions on the far side. Okay. Opposite where Alanis is standing.
Charles 你好，我是那个 SNL Financial 的 Tracy， 有2个问题想请教一下。一个是就是港交所去年推出了3个那个人民币计价的金属交易合约，但是好像交易量相对是比较低，就您认为这个背后的原因是什么？还有港交所计划怎么去解决这些问题？然后第2个问题是您刚才提到说，就是港交所现在也在打造一个这个大宗商品的平台，那就是有没有什么详细一些的计划可以分享一下？然后在这个过程中，您怎么看就是港交所和内地大宗商品交易所之间的竞争和合作的关系？谢谢。
对，这个大宗商品是我们非常关注的一个发展的方向。我们推出了你刚才讲的3个小合同，这3个小合同大家知道，香港这个地方本来是没有一个自然的商品的发展的一个土壤的，因为以前我们从来没有过。那么呢，国内巨大的需求，也有一些巨大的市场，国际有巨大的这个市场，但香港本身呢是没有一个商品的传统的，因此我们这个 ACD 在这做，就好像是首先例如我们是我们 LME 的产品，我们这个巨大的产品这个 root 这个 tree 树是在英国，我们把这个果实拿到香港来做 cash settled， 这就是先一个盆装的暂时长不了很大，我们一点不着急，只要它茁壮的开始慢慢的长起来，因为最终香港这个地方 commodity 能不能生根，是能不能把内地和国际在香港结合在一起，有水有土壤有种子，才能够茁壮的成长起来。这每一项都要一个个的来，鸡和蛋哪个在前不重要，但是都得要形成一个循环。我们现在是在这个循环的最初阶段。那么呢，具体来说的话呢，和商品交易所的合作的话呢，我们都谈的也都很广泛，也很深入，各种各样的模式都谈过，然后大家都有各自的想法和共同的想法。我们这些东西逐渐的要找到一种既符合大家，我们当然希望全都到这儿来。人家有的东西可能觉得到这儿来对他来说是非常有利的，有的呢可能暂时呢没有什么意义的，有些呢他还要想清楚是不是有竞争的关系。所以说这里面能不能找到互赢的，就是我们以前和上交所也是大家都认为你们和上交所天天都是竞争啊，你看现在一点都不竞争了，我们全都找到了共赢的地方，我们一定和这些交易所一定能找到共赢的，那就一定要去想他想什么，你不能光想你要什么，你一定想他要什么，因为你自己要的东西你不要的东西你肯定不会去做的，但你要知道他要什么，然后和你要的东西如果结合起来，我觉得我们短期内我觉得没有什么可宣布的，但是没有一项工作现在是停在那边没有干的。
Okay, we're running out of time. There's a lady in the front who's had her hand up several times. Let's call on her, and then we'll maybe wrap it up there because we're running late. People are getting hungry, and it's after 1.
Thank you. 你好，小张总，我是香港有线电视的池子薇。那请问一下，第一个问题就是那个股权改革，因为之前那个坚持那个同股同权的时候，那个阿里巴巴跑到那个美国上市，那传闻有说那个小米可能去上市的话考虑那个香港还有那个美国上市。那如果要把握那个小米上市的话，你这个会不会展开新一轮的那个股权改革的咨询，还有允许那个同股不同权那个的方式？第二个问题就是说刚才提到很多深港通还有其他的互联互通的方式，那如果那个深港通在今年推出的话，那对于你预期那个估计那个对于那个 A 股纳入那个 MSCI 那个新兴指数那个成功那个多大的机会？谢谢。
对，纳入新股的这个就 MSCI 呢，今年可能是一个挺重要的一年，他们要仔细的来讨论，到底在沪港通、深港通如果都通了，甚至还有别的情况还都能通的情况底下 ，A 股市场还有什么原因不应该被包含在 MSCI 这个 Emerging Market Index 里边？我觉得这个原因会越来越少了。所以说我非常的 有希望，非常的希望呢，今年这个问题呢能够得到很清晰的解决。但今年这个解决肯定不会是说 A 股肯定都全部都进来了，那只是说在现有的沪港通和深港通，甚至将来比如说在有衍生产品通的情况底下，在这些大的框架底下 ，A 股应该至少能够以什么形式来考虑加入，有这样一种什么样的结构，有这样什么样的工程方程式 formula， 然后能够最后让给投资者一个很清晰的未来的一个 roadmap， 对吧？能够知道说，估计这几件事要发生了的话，沪港通这个 A 股就会逐渐的就纳入。在今天的上海情况底下，沪港通可能有几个点儿，明天深港通有几个点儿，深港通这个额度去掉以后有几个点儿 ，underline 包括不包括有几个点儿，这等等这些把它都能有可能都今年呢希望能够呢都有比较清晰的这样一种发展。我相信的话，这是将来是今年应该是可以，大家应该可以看到很明确的这个进展。股权的这个讲到这个股权的这个不同股权的这个咨询呢，咨询的程序进展、今天的情况、咨询的内容、下面的计划，一概都不由我来自己说，对吧？这都是属于上市科，这个由他们来呢统一给大家来讨论。我只是上市委员会中间的一员参与讨论，那么具体的这个内容呢，我不便在这里呢做更多的披露。但这件事情，我相信道理大家都很明白了，也想做的人、不想做的人，为什么理由做的人呢，已经没有必要再互相再弄在一起很激动了，因为呢，谁也不可能改变谁的想法。那最后呢，就让这个我们香港的程序正义，让这个程序走下来。这个程序走下来，该走到哪里就走到哪里，走不下去了就不走了。我们还有生活中间还有很多更美好的事情去往前走，不用天天想这件事。我觉得有这个必要吗？那我不应该利用这个场合我自己说有必要或者没必要，除非有一个人跟我说完全不同，那我们两个在这一起辩论一下，那还有必要。但是如果光我自己说不公平，